Welcome to the CLS Market Review for the week of October 14th, 2013. I'm Matt Santini. With the media continuing its single-minded focus on Washington, we'd like to shift gears this week and be a bit more forward-thinking. As CLS continues to evolve and innovate our offerings, we have never been more excited for what has developed into an extremely robust pipeline. Investment management is as much about market navigation as it is about product engineering. Successfully creating and managing investment vehicles in an ever-changing asset allocation universe is what really makes our occupation so enjoyable. Since inception, CLS has focused on the more traditional asset classes, stock and bond ETFs. As the scope of ETF offerings continues to widen beyond simple indexing, alternative investments have now become more accessible. It is this accessibility that we plan to capitalize on in the near future. Since the onset, the primary objective of adding alternative investments is to increase risk-adjusted performance, either by lowering portfolio volatility or by expanding opportunities to increase returns, or both. The residual effects of an alternative allocation may include absolute returns and minimal broad index correlation. This chart from Allen McKnight at SunTrust shows how important an allocation to alternatives was during the last 6 major S&P corrections. The risk mitigation generated by alternatives is very apparent. A singular portfolio comprised of alternative ETFs would incorporate popular strategies including managed futures, real assets, private equity, and active hedging. Affording this type of typically accredited investing to general retail investors in the form of a portfolio of ETFs makes sense. Clients will have the ability to overlay an alternative strategy in what would have been just a traditional allocation. As the advisors absorb the merits of diversification and risk mitigation through alternatives, we can expect investor participation to continue. The Financial Times FT400 is a list of the top 400 financial advisors based on assets. Their average book is over $1.3 billion. They were recently polled about their plans for alternative investments. The study found that although alternatives make up only 3% of industry assets, 8% of alternative assets are coming from these 400 brokers. Sophisticated retail brokers are clamoring for a piece of the alternative pie. This chart shows the percentage of FT400 brokers who plan to allocate towards different alternative strategies. For the reasons I just mentioned, and others to be highlighted in the coming months, the time is right for CLS to launch an alternative managed product. Please stay tuned.